So tertiary market, it's going to be like $200,000, $300,000, $400,000, $600,000, $700,000, $800,000 facilities, and you're going to typically find those in tertiary markets. Now, you may be able to find those in secondary markets. Smaller facilities are in the secondary markets. Now, also remember that I have what's called sub, right, for each of these. Right? So it's the sub-primary, the sub-secondary, and the sub-tertiary markets. So in between the secondary and the primary market would be a sub-primary market, right? So for instance, we're buying a facility right now in Carrollton, Georgia. Carrollton is a suburb of Atlanta. And it's got like, 40 or 50,000 people in it, right? The suburb. But I mean, from Atlanta to Carrollton is like, it's like primary market. But it happens to be, half an hour outside the city, and it's a suburb, right? So even though it's really like primary, it's kind of sub-primary. So you'll be able to, maybe able to get a cap rate that's probably like, I would say maybe like 6 cap, something like that right there for like for Carrollton, we'll probably run our numbers at like a 6 cap. And then a sub-secondary market is a market that it's the suburbs of a secondary market. So you've got Clarksville, and then you've got, I think Fort Collins is what it was. I think what it's called. So you've got the military base there. That can possibly be like not a secondary, but a sub-secondary. And they have like the little towns that are all the way around. Because we've talked to a lot of boots on the ground people. We've been interviewing for boots on the ground people for this facility. And they're like, oh, I'm in blah, blah, blah town, Lila or whatever. And it's like I look, and it's like a little tiny town that's right on the outskirts of Clarksville, right? So that would be, to me, a sub-secondary market. So you can't get a tertiary market price for a sub-secondary market, right? It makes sense? And then you have the tertiary markets, but these are towns that are like, 25,000 or less, right? And then you say, yeah, so 25,000 or less for the tertiary, and then a sub would be like a 5,000, maybe like 5,000 or less. And remember that population is super important, right? Population is super important. So I said secondary is 200,000 plus, 200,000 plus, and a sub-secondary, these are going to be like, suburbs. They're going to have like 50, 30 to, 80, maybe 30. So how big is a suburb? 30 to 50,000 people, maybe. Okay, and then you've got your tertiary market, which is 25,000 to 5,000, and then you've got your sub, which is like 200,000 plus. And then you've got like more, right? You've got like, whatever the metro, 1 million people or whatever in Orlando or Atlanta or some Fulton County, Atlanta or something like this. Okay, so that's kind of like how you look at it. And so now in terms of where should I do market analysis, this is the first question. What can you afford? And then you look in the area that you're interested in. So you're saying, look, I live in Missouri and I only have $100,000. Like one of my students is exactly like this. And so I'm talking to her because we're doing turnkey acquisitions for her and trying to help her find a facility. And she's like, I can only afford $100,000. I live in Missouri. This is where I live. And she lives around like the Lake of the Ozarks, which is like kind of I would consider that like a secondary to a sub-secondary market because that's like a more expensive market, even though the population is a little bit lower. It's like, okay, well, maybe she can't afford that area. So she's going to have to go out into these little tiny towns that are in like away from that area. Right. And that's kind of how you think about it. And this is my opinion. This is how you think about it. All right. So that's my 2 cents on market analysis. And where should I start? Where should I start? Okay.